Good morning. Welcome to the B.F. Anderson Technical Report for June the 4th. You know, cash levels have skyrocketed. In other words, there's a lot of cash on the sidelines because there's so much fear. Now, we've always talked about sentiment, fear, greed. It's a secondary indicator, but it does tend to indicate when there's a lot of cash on the sidelines because when people are fearful, they're going to move to cash, gold, etc. Now, you're not going to see cash levels jump like this from roughly 10% of equity market capitalization to 16%. What the bottom line on that is very simple, is that there's a lot of fuel to fuel the rally. And so when we look at sentiment, and we need to understand that it is a secondary indicator, but it's also an indication of cash levels. Now let's get into the market. Let's just see what's going on here this week. Been a good week. NASDAQ continues to stay in a very strong uptrend, very close to making an all-time new high. The most important factors, though, is that the moving averages have turned up decisively and are in a nice, steady uptrend. The small caps, as we... In fact, I jumped a little too quickly there. I'm sorry. This is the 35-week moving average. Now we're looking at a weekly graph. Again, that we're above the 35-week moving average. This is going on several weeks. Very positive. Now on the small caps, we're seeing some improvement there, breaking out of a bottoming consolidation here. We're still on a death cross, but we are seeing improvement in the small caps. S&P 500 is now above the upper moving average. We never got a death cross. The S&P looks solid. It has been lagging the NASDAQ, but it does look like it's starting to try to catch up. Again, the NASDAQ, as you can see, is on a monthly basis looking very strong. Indicator is fine. This does look like the resumption of a bull market. China. The Golden Dragon, which is all the Chinese stocks that trade here in the United States, coming out of a bottoming process. We're seeing a positive golden cross here. So China looks improving. The aggression index turned back up, which means that we've got a ratio here of the NASDAQ compared to consumer staples. This is telling you that investors are risk on, they are looking for aggression. So as you can see, the 50-day moving average is definitely in an uptrend. On a weekly basis, same thing. We've got the main indicator here is the lower moving average. As long as it has turned up, we look solid. Now on the three economic indicators that we're looking at, this is the 10-year Treasury note. We are seeing somewhat of a little bit of a pop in interest rates here, which is indicative of an improving economy. However, we're not seeing any major up move there. Now, on oil, we're seeing a big improvement in oil. Oil is now up to $36.81 on the June contract. And, we haven't broken back above the 200-day, but getting close. Now, on the small caps, again, we're getting close to the 200-day. We are seeing improvement there. Now, this is one concern. Again, now I mentioned earlier in the video that we had a lot of cash coming in, which is a very positive sign. However, the put-call ratio has now gotten into what I would call a hot area. So, again, if you have any stocks in your portfolio that you're uncomfortable with or not acting properly, this would be a good time to probably lighten up on those situations. Now on the S&P 500, just looking at it on a daily basis, you can see that we've got nice action here in the moving averages. The S&P is moving up, and it has broken above the 200-day moving average, and the S&P is back up to 3,100. Now remember, the old high is up here at 3,400, and we're getting awful close. New lows, we're not seeing very many new lows at all. We only saw 4 yesterday, so that continues to be a healthy indication. Now, this is an important graph. This is the percent of stocks above their 50-day moving average. Now, what we're looking at here is what we call a blast-off indicator. Now, on May 27th, 90% of the New York Stock Exchange stocks closed above their 50-day moving average. And when that comes after a major downturn, it is a rare signal and almost always bullish. So let's go back and look at the 5 times it's happened previously. Back here in 02, 03, you can see where we got way down here where only 5% of the stocks were above their 50-day. Then you reversed, you went back up to 90%, and you can see here the market put in a bottom and good things started to happen. Here we have 09. Now you can see here we actually had a double bottom in 09 where you got really oversold, a little bit less oversold, and then boom, you break out above 90 on this particular indicator. You can see the market put in a bottom, good things start to happen. This is 2011, same thing. You got way oversold, up to 90%, bottom put in, good things start to happen. This is 2015. You can see what happened here. Again, we had a double bottom here. You got way oversold. Then we rallied, got back up to 90%, meaning that 90% of the stocks are above their 50-day moving average after 95% of them were below their 50-day moving average. You can see the market put in a low, good things started to happen. This is 2018, 2019. You can see the same process. Well, that's where we are today. We have gotten a blast-off indicator. As of yesterday, the indicator is at 91.73, so it's actually pretty substantially above 90, and in fact, it could be close to a record high. But you can see here, hopefully we have put that bottom in, and we're getting a blast-off indicator that tells us maybe good things are going to be happening. I believe that is the case. Now, on the top 5, a lot of interesting names here. This is NVIDIA. We're talking semiconductors, very powerful company, doing quite well, positive pattern, holding the 10-day moving average, which is always a good sign. This is PayPal, which is, really in the month of April, they increased their number of customers by 7 million new customers. This is looking really good here. You've got a nice gap up here. That stock traded 35 million shares on this particular day when they announced earnings and they announced the number of new customers that they had. You got the gap up. The stock has held that gap. It's holding that 10-day moving average. Looks very positive. We do own PayPal. Tesla, we also own Tesla. Now, with Tesla, I'm reading a book right now by Walter Isaacson called Steve Jobs. It's an autobiography of Steve Jobs. These types of investments, every great investment starts out as a speculation. You've got to try to see the future. So back with Steve Jobs and Apple, what an amazing story this book is. I recommend the book highly, by the way. We do own Tesla, and the speculation here is that Elon Musk is going to carry this company with his scientific abilities and his technology. We're going to see, possibly using your imagination, you're going to see some major breakthroughs in the energy area. Now, this gap up right here, this pop right here, was the day that they sent the spacecraft up with the 2 astronauts. You have to really kind of think about it. If this guy is capable of doing that, you really wonder what he's capable of doing with battery technology. We're waiting on something called Battery Day. However, they keep delaying it. I have a gut feeling that it's causing somewhat of a cannibalization of their existing sales. I personally have a Model Y on order, and I was awfully tempted not to do it because I want to wait for the new battery technology, but it's kind of like saying I want to wait for a new iPhone. So anyway, Tesla looks positive. Everything looks good there. Zoom Video announced earnings just yesterday. Stock's really red hot, broke out, trading well above the 10-day moving average, which means it is somewhat extended. You're getting somewhat of a volume cluster here, so it does look pretty darn positive. So all in all, Zscaler, last one on the list, is cybersecurity. They announced earnings. We're really seeing some very good corporate earnings reports coming on some of these companies. So all in all, that's it. If you have any questions, please give me a call.